Hello, trading is closed on January 11th, 2016. Let's change our usual order around and look at the MEJT predictions first. Early in the day, the system said ultimately lower prices would print. It gave a standard sell signal 2. Here are the targets, and they printed. The S3 means if the move is immediate, it tends to be strong, and the 3 gives the reason the move wasn't immediate. So there's no obligation for the move to be strong, even though it was. When the market rallied here, the system gave blue Fs, meaning it was a false move. In the afternoon, the system said ultimately lower and higher prices would print. Here's the call for the lower prices. Here they are. Red Fs mean it's a false move, and even though we dropped as low as 1901, the system predicted ultimately we would print over 1915 after this time, which we did. And we have no new signals for tomorrow. Well, over the weekend, I said that we had some signals to go long from Tom to Mark. Here's the combo signal. Here's the sequential buy signal. But I also said a lot of things had been failing, including the buy signals on a 30-minute chart. Here's the stop loss, and this is Friday's close. I said unless we gapped up strongly at the open, here's the stop loss line, unless we gapped up strongly at the open, the market was in for more drop. But if we did gap up, we could have a good size rally. We're pretty much in the same position now. We need to gap up at tomorrow's open. Otherwise, I think we're still in trouble. However, I think the chances for a gap up are reasonably good. Here we had a gap up, a series of lower lows, couldn't hold on to any of them, and actually closed in the black. This is a pattern which often closes at the day's high. When we cannot close over these prior highs, it usually leads to a sizable drop. But if we were to gap over this high, or at least take it out promptly, that would overrule that prediction. So we have two different things saying we need to have a gap over this high to keep going up. I think we're early in a years-long negative market. Probably isn't the best time in the world to be looking for longs. However, we do have some support from the Andrews pitchfork. Many times when you have a straight line drop like this and you have a consolidation in the middle, the consolidation's equal to 23.6% of the whole pattern. Typically, if you set this at 38.2 and this one at 61.8, you can identify the high and the low. Well, it didn't work today, but if you just slide this down there a bit, there's your high, there's the low, and if it works this time, that's a reasonable low. So tomorrow's call is the market is still in major league trouble, but if we promptly take out today's high, ideally by having a gap over it, we could still have a strong move up. Don't forget I have targets of hitting this gold line and also this green one. This low is also a Fibonacci target of a prior consolidation. So tomorrow's open is going to be critical. If we gap up, we can go much higher. If not, it's more trouble ahead. That's today's call.